Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Jon Deane, CEO of InfiniGold, to discuss the impact of global stimulus programs on household financial assets and the gold markets. Jon, it's great to have you with us. Welcome back to Trade Talks.
Yeah, hi, Jill, and thanks for having me back.
Of course. And what do you believe the impact of global stimulus programs as a response to the COVID-19 shutdowns is going to have on the global precious markets and other assets?
Yeah, listen, I think probably a bigger question here is what monetary and fiscal levers or economic levers we have left in our arsenal to manage the next economic cycle. If you look back sort of 30 years, we've kind of gone through ebbs and flows of sort of leverage going into the system, that leverage being passed into the sovereign balance sheets, whether it's 91, into the dot-com boom, '08, and then now obviously the pandemic. And in my opinion, we've kind of been moving much more towards a situation where our ability to control the economic cycles through monetary policy is getting more and more limited. And so when you look at sort of where we are from a precious metal standpoint, obviously precious metals is predominantly a store of value and historically has been used as a form of currency. And nowadays it's obviously been coming back more as a store of value. In the next inflationary cycle, if we can't control that inflation because we're limited through our monetary policy response, and the reason I flag that is that, obviously the amount of government debt, sovereign debt, corporate debt, when you're at zero rates, and if we can't control that inflation through monetary policy, do we put ourselves in a situation of, really real assets going dramatically higher through inflation? And coming back to how a government could respond today, in my opinion, precious metals are a pretty unique way to, I guess, protect your value, your assets in general, against some form of inflation. And I'm not really suggesting that inflation is coming back today, but given where we are in the cycle, we are seeing a lot of investors start to allocate to the space.
Well, Jon, the market's positioned very close to all-time highs. In fact, we saw the Nasdaq 100 break through all-time highs this afternoon in the US. What are your expectations around market structure if we continue to break all-time highs? Because it feels as if, regardless of what asset class you're looking at, it's very disjointed from what we're seeing from the macroeconomic picture.
Yeah, I mean, obviously there's a lot of thin air up there, right? I mean, if we break through 1925 in the gold market, I think, the market could get extremely volatile. Previously in cycles like this in the gold market, $100, $150 moves are generally what we sort of would envisage. A move higher from here, I'd suggest that, a lot of the dealers are short upside calls. You could have quite a lot of volatility up there. We're also seeing, a large number of the big investment banks putting out recommendations to add gold to their portfolio. You're seeing private banks recommending to add gold to their portfolios as well. I don't think that messaging has already filtered through to retail or even high net worths yet. Obviously, a number of hedge funds already allocate to the space in small size. A number of wealth managers, I know down here in Australia, have also added gold into their portfolios. But on a break higher, I would expect a large number of these people to increase their allocations. And then on top of that, you'd probably see some retail participants come to the market and look to sort of get into it. So in my sort of gut feeling is, a break higher will be volatile and we'll see a lot more participation in the gold market.
Let's talk about this on a very high level here. If inflation is in fact on the horizon, what role does gold play in this environment, especially if retail investors are going to start to get wind of this and add it to their portfolios? How should they be using this?
Yeah, in relation to inflation, there's probably two ways to look at it. I think there already is inflation through asset inflation. I think there's an asset bubble sort of already on the horizon again. The amount of stimulus that we've seen through both monetary and fiscal, obviously, 2.3 trillion through the CARES Act alone, has created a significant move higher in underlying assets. I think real estate, any form of hard asset is going to start moving higher. If you look at equities, we're talking about it previously, but equities at a multiple side of things, probably 15x, 16x as a multiple is probably the normal. Now, when you have 0 to negative rates, maybe 25x is your normal. So assets naturally will move higher to reflect those new multiples. If coming back to where we think inflation is, headline CPI, obviously there's a fair bit of slack in the economy given COVID-19. That slack will probably weigh on, really consumer price indices, obviously energy prices, oil prices being substantially lower. Food price, agricultural prices remain very, very much on the low side. But as we see more and more asset inflation, in my opinion, I think a large number of these sort of drivers of CPI, headline CPI, will actually start to move higher. So if you think about it from a real estate standpoint, if we start to see, really people able to borrow at negative rates or zero rates, negative rates obviously in Europe, then people will start to pick up more and more assets. So people will start buying farmland. I know down here in Australia, there's a lot of sovereign funds which have been buying up farmland. The returns on those farmland, can be substantially lower than what they were historically because of where we push rates in general. So by pushing those acquisitions to higher levels, naturally that pushes the underlying produce that comes off those properties to higher levels. And you'll start to see, I think, inflation start to filter through. So with things like precious metals, coming back to what I said before, it's a store of value. In essence, in any form of inflationary environment, gold's been proven to be a good defensive asset as a store of value. It's obviously can't be printed, unlike what central banks are doing around the world. And being able to sort of have some form of exposure to a hard asset, which isn't really exposed to the economic conditions, can be a good way to protect someone's portfolio. In our business in InfiniGold, we're already seeing really exponential increases in users of the platform, but also people allocating to the space, so starting to add gold to their portfolios.
And Jon, that's exactly where I wanted to go as we wrap up here. Do you think we're moving towards gold being used more as a payment solution? Again, given the devaluation of global currencies, and of course, this is looking beyond COVID-19, but it kind of makes the case for it.
Yeah, I think historically gold was used as a currency. It probably, there's a lot of issues with gold historically as currency, right? I mean, it's really not fractionable, right? I mean, a physical gold bar, you can't really chip it off and go buy a coffee with it. So what technology's enabled for historical stores of value, historical currencies, is them to become really infinitely fractionable. And from that standpoint, when we look at something like gold and what we do with the Perth Mint down here in Australia, as well as a number of other partners, is we enable their assets to become really some form of infinitely fractionalizable underlying asset. So by creating that solution, you could move it back towards a payment solution. I think to go into economies like the US and to use it as a payment solution today, it's probably not realistic, because obviously, the government restrictions, taxation, all sorts of things would need to fall into place. But in the developing world, could gold be adopted as a solution for payments? Definitely. And, blockchain's obviously offering a number of variables or opportunities in this space. There's a number of now blockchain tokens out there which can be used as a payment currency. Our own token, PMGT, is one of them. You can spend it effectively on a MasterCard, a Visa card. So in theory, yes, you could definitely move back towards gold being used as a payment currency around the world. And particularly if we get back to where I guess we started this conversation, in the fact that if we no longer have economic levers to control economic stability, and people get concerned around holding their underlying assets in their local currencies, then holding gold as a solution is not just a store of value, but when you can also go to the corner store, buy assets with, or assets, goods and services with gold, could become quite attractive. And particularly when you look at developing economies and places with less than stable economic conditions already.
All right, Jon, great to have you with us always. Thanks so much for joining us on Trade Talks.
Thanks, Jill.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.